As the captain of your crypto journey, you need to know what's happening under the surface so you can navigate murky waters. To do this, you need to look beyond the price action you can see to what's happening underwater on the on-chain Bitcoin network. And just like any good sailor needs a sextant to navigate, you need the on-chain bundle from MDX ALGO, which is this tool where you can see all the on-chain activity with this line, and then all the subcomponents broken out into miner activity, whale activity, network volume, social sentiment, and retail stablecoin demand. So that is why I've created this guide to the on-chain bundle to help you find your crypto treasure with this powerful tool. The first on-chain tool, and possibly the most powerful of all the indicator components, is the retail stablecoin demand, shown by this orange to yellow line here on a scale of 0 to 100. Now, to explain what this does, essentially it's measuring the flow of money out of the crypto coins into stable coins. And the way this is calculated, it's derived from the crypto total market cap and the percentage stablecoin dominance. And by using those two variables, we can calculate how much money is flowing out from the cryptos, Bitcoin, Ethereum, all the different other coins across the whole market cap and moving into the stable coins, and vice versa. Now, this is a contrarian signal because retail will typically panic sell when crypto's dumping and then FOMO buy when it's pumping. It's plotted on a scale from 0 to 100, although it's best to view this on the chart inverted because then you can use it similar to like the RSI or other oscillator tools. It will not be affected by which trading pair you have loaded on the chart, since the data comes from the total crypto market cap, not the trading pair you're looking at. So it will always be the same regardless of the trading pair. And in terms of time frames, this one will work on all time frames, all the way up to the monthly, all the way down, even to the 1 second chart. But generally, this is a very, very reliable indicator, provides numerous trade setups and confluence. And yes, you can see when the market's overbought or oversold. You can use divergences. This thing is an absolute beast. So if we jump back into the menu, the way I like to set this up, click here to invert the scale, and you'll see it will flip round at the bottom here in a moment. Next, turn on your divergences. So regular, hidden divergence. So here is a good example of the stablecoin indicator helping us to identify opportunities to buy the dip. And here's an example from Bitcoin when it hit the lows around 54,000 in July this year. And I mean, it's so accurate. If I draw a vertical line, when we hit those lows there, look at that. It's exactly on the candle where it spiked down is the exact bottom of the stablecoin demand when the market was oversold. We'll just get rid of that line. So quite simply, if you see other confluences and the stablecoin indicator is down here in the green and you think we're at support, it's a good buy opportunity, and vice versa with the highs. Price rallied, went up to around 58,000. Stablecoin indicator is now towards the top end of the band. just like an oscillator, and not long afterwards, price came back down. And then not long later, it threw up another really nice signal. Price came back down here towards 54,000 to back test this swing level from the support before. And you can see here that the stablecoin indicator is making a higher low. It's dipped into the green, and that would have been a tremendous second opportunity to buy the dip on the second backtest. I could show you thousands of examples across the Bitcoin chart on the 4 hour, the 1 hour, 15 minute, even down to the 1 minute, the 5 second. It's really, really powerful. And as you'll see later, you can now stack this with other indicators like the RSI, which I made a really good video, which is popping up here. Go and check that out. And if you stack them on top and you start seeing confluence between the RSI, the MDX ALGO oscillator, the stablecoin demand, when you're hitting those lows, they can be some of the most juicy trade setups you'll see, which I'll just show you on the chart now. So I've loaded the 4 hour chart, and now I've got the stablecoin on-chain indicator, the RSI, the stochastic RSI, and the MDX ALGO oscillator at the bottom. And now, if we look at that 54,000 low I showed before, you can see the confluence here. We've got the stablecoin dipping into the green at the lows. You've got RSI in the overbought zone. You've got bullish divergence on the stochastic RSI with the percentage K line crossing the slower percentage D line. And you have your harmony oscillator hitting the green zone at the bottom with a reversal dot. And then you get the move up. And then on all these indicators, you're getting that higher low on the stablecoin, higher low on the RSI. You're getting the stochastic RSI held above the 20 oversold line and a higher low. And also on the oscillator, you're getting a higher low and a reversal line. And since that move, if you'd got in there, price has now gone up by, let's just measure with the ruler. If you got in here, that's a 23% gain. So that just shows you the power of looking at the on-chain activity, particularly with the stablecoin indicator and some of the other components, to draw your eyes in and then start adding your other tools to really find those juicy setups. The next tool needed for your voyage is the percentage of crypto holders currently in profit, shown by this orange and green line plotted on a scale from 0 to 100. And to explain how this works, this is a very simple metric which looks at the on-chain data showing where people were buying or selling their crypto, comparing to the current price, to then easily calculate whether most people are in profit or loss. Now, generally, any value shown on the tool below or close to the 50 line usually represents seller capitulation, because most holders are in loss and tend to panic and dump their coins. Then any value towards the top around the 90 to 100 range is often where people will take profits, because the majority of holders are in profit and want to take some of that risk off the table and cash in their gains. Now, again, this tool only works on the daily time frame, although this is slightly different because it's a contrarian indicator. So if I jump back to the chart, you can see here, when we hit those highs on Bitcoin around 72,000, the percentage of holders in profit was at the 95% level. So everyone's made really good money and they want to take some risk off the table and they've cashed in their profits, and then we've had this move down. And then similar thing happened again here. In May, we hit 71,000 area again. Most people are in profit, about 93%. And again, we got a move down. And then for the opposite example, if we go back to the lows from the start of 2023, here you can see that when we crashed down after the FTX dump to 16,000, most people were in a loss. Everyone dumped their coins below that 50 level, and not long after that, we started getting the move up. So yeah, very simple indicator, and it's just playing on that retail mindset of ultimately buying the highs and selling the lows. So we just do the opposite and look for those nice contrarian trades at these key points. To navigate the high seas of crypto, you'll also need the social sentiment oscillator, which is shown here by these dots plotted on a plus or minus 100 scale. Now, this tool is measuring the positive versus negative aggregate Twitter and Telegram posts or articles related to crypto. So essentially, it's providing us with a yardstick of the amount of hype or greed versus the amount of doom or fear. But this is specific to social media only. As we saw, it's on that scale from minus to plus 100. Again, it's daily data only. And you can adjust the sensitivity settings to smooth the oscillator if you want, although usually the defaults are good. And generally speaking, this is just another very simple contrarian indicator for higher time frame analysis. And looking on the chart, I mean, basically at the highs here on Bitcoin, when we're hitting those 70 to 72 price levels, we've got max hype. Everyone's, posting all these bullish articles and saying we're going to the moon with crypto and Bitcoin. And obviously the oscillator is at the highs here, kind of in the 80 to 90 region. And that's usually when the market's got overheated, and then we'll see prices come back down, and vice versa. When we hit the lows, like this recent low in Bitcoin in July at 54,000, everyone gets very fearful, very negative, and the oscillator hits the lows, and then of course we pump the other way. So another useful tool in the toolkit for those contrarian signals. Just like Moby Dick hunted whales on the open ocean, we can track larger institutional traders' activity using the whale bubbles tool, shown by these yellow circles here. And to explain exactly how this works, the tool is calculating any on-chain transactions occurring between different wallets where the size of the transaction is greater than $100,000, and also where there is a higher frequency or quantity of those transactions happening together. Now, because it's not possible to know if the transactions between wallets are buys or sells, this is only showing large transactions. We don't know the direction. Also, the data for this is combined between both Bitcoin and Ethereum transactions. And lastly, the data is only available on the daily time frame, so we can only look at the daily chart. And lastly, it does have some sensitivity options where you can include a greater or smaller number of those large transactions, although I find the default level 5 works pretty well. In terms of uses, I mean, generally, this is something where we're trying to follow the trend, because normally whales have been in the market a long time, You might call them so-called smart money, and they usually would accurately manage to buy the lows and sell the highs. So we want to be following them in that way. And this can give us some nice extra confluence for our swing trades when we hit key levels on the chart. And in a moment, I'll also show a nice way where you can improve the view of this by going into the settings menu, which you'll find here. And if you switch off the colors here using the transparency slider, you can isolate those bubbles. And then if you use the three dots and select move to existing pane above, you can overlay this directly on the chart, which can be quite nice indeed. Although you do have to adjust the scales a little here. So with Bitcoin, for example, when we hit the recent highs around 70,000 in mid-March, you can see a lot of the whale bubbles here signifying a lot of those big, large transactions were happening. Now, normally the whales are going to be selling at the highs, so this could have been a place to start thinking about a short trade and catch this swing. And actually, we did see price move lower in the following months. And then if we go back in time a little, let's go all the way back to the absolute lows for Bitcoin after the FTX crash, down here in January, February 2023. And you can see actually before the pump from the absolute lows started, those whales did start accumulating before that pump happened. And then you can see a similar trend during many of the dips that happened over the following year. Here in March, they were buying again at lows, and then moving forward again in kind of August, September, when price leveled out around 25,000. There's a lot of whale activity. And here, before the next big move up started in October, lots of whale accumulation here. So you can start to see that this can give you a really good clue of what those big players are doing and help you to start thinking about when it's time to jump in and look for those juicy swing trades. The next component of the tool is the miner confidence metric, shown by these red and green bars above or below 0. Now, to explain exactly what this is doing, it looks at the hash rate on the Bitcoin network only, but more specifically, it's tracking the changes in hash rate, not the absolute hash amount. And essentially, this is showing us how many Bitcoin mining rigs are being turned on or off. When more rigs are being turned on, it's positive, and vice versa. Now, again, the data here is only available at the daily level, and the sensitivity setting in the menu will allow you to adjust how much of the hash rate is needed to be registered as a change. But again, the default usually works quite well. And in terms of uses, again, this is a contrarian indicator, since usually the miners will turn off their machines or some of their machines when price is low, and they're waiting for the difficulty level to reset, versus when price is really high, they want to make the most of it and they turn on more and more machines. Another interesting thing you may notice is that miner activity will drop after the Bitcoin halving, since obviously the block rewards were reduced. And in terms of trade setups, sometimes there can be interesting opportunities when you see a flip from negative to positive, meaning the miners are suddenly getting more aggressive and turning on more rigs. So jumping back into the chart, again, a good period to see this obvious trend was the crash to the lows last year around the end of 2022, when prices went down to around that 15 to 20,000 level. And here you can see a lot of the miners turned off their rigs, so the change in hash rate was negative, there's less hashing, so it spiked down several times here. But then interestingly, if I zoom in a bit more in here, while we were at those lows, you can see just before this big pump started, a lot of the miners started turning all their rigs back on and the hash rate spiked up. So that could have given us an interesting early warning that a pump might be coming. And then vice versa, at the highs, let's say here, when price lingered around 30,000 for a while, before we saw this big drop, a lot of miners were turning off their rigs. So generally with this one, you're looking for those flips from negative to positive to see the miners suddenly start changing behavior, which might give us a clue a pump or a dump may be incoming. I don't use this one that much, but it's a nice extra tool to have a look at to give you more of a broad picture of what's going on. And the last subcomponent of the tool is the total network's volume, which is shown here by these bars and this smooth moving average line. And this tool is essentially showing us the total amount of Bitcoin and Ethereum transactions happening on the network to give us an overall idea of total activity on the network in spot. It's plotted in absolute values. You can change the sensitivity again, which will adjust that moving average line. It's daily data only. It includes both Bitcoin and Ethereum. And generally for this, it can help you notice big spikes in network activity, which often happen around liquidation events and big pumps. Generally, in terms of uses, it can provide a bit of extra confluence for very high time frame analysis. I personally find it has limited use, but it does feed into the aggregated index indicator we'll see later. So it's part of that calculation, so it's important to have it in there. But looking at the chart, you can see a couple of examples. You can see these big spikes in network activity that have happened on big dumps, like back in 2021. And then here in summer 2022, there's a big dump there. But then in more recent times, it's harder to discern a very obvious trade setup from this, kind of in terms of the more recent price action, because the activity now, the network is becoming more mature, there isn't such extreme variations. So use that one sparsely, but just bear in mind it is useful to feed into the aggregated indicator. Sometimes at sea, all these gadgets and technology can just be a distraction and we need something simple. Well, for that, we have the Aggregated Confluence tool, which brings all these components together in one simple indicator, which is the first option in the menu here. And this is just a simple line combining all the tools together, plotted on a scale from -5 to +5 with this line here. Now, in terms of how this works, the guys at MDX ALGO have mathematically harmonized all those subcomponents to combine them into this one index. And it's actually quite clever because if you recall, some of those components were contrarian signals, whereas others were following the trend. So they have adjusted for that so that all these tools kind of are singing the same tune, if you like. Now, one way to think about this, it does have some similarities to the fear and greed index, which I've brought it up here from their website. And if you scroll down, you can see that that is built in a similar sort of way with things like the dominance, social media, volume, and so on. However, I find that the MDX ALGO On Chain tool is far superior because, first of all, you can just plot it directly on TradingView with all your other analysis, but then also it has all these other advanced tools. So, you have your regular and hidden divergences, and also it does have an advanced dashboard I'll show in a moment. And then in terms of time frames, for this one, you have to remember that some of the components are only daily, whereas others do work on the lower time frames. So the aggregated indicator will work on the lower time frames, although personally I found it provides the most powerful signals on the daily. And just generally, it's a really good catch-all confluence indicator, which I keep on my higher time frame charts all the time. And then when I see something interesting, I can then drill down and look at all those subcomponents to see what's going on. So if we jump back into the chart, to turn on the dashboard, just select here, I like the advanced mode. So we turn that on and it loads here on the right hand side. And now you can see the score for the aggregated index, which is being displayed. But also you've got all those other subcomponents down here with all their relevant scores. And also it's kind of quite helpfully color coded, green buy and red sell essentially. And then in terms of using the aggregated mode, this thing provides so many good signals. For example, recently at those lows in Bitcoin from 54,000, here look, the aggregated index hit the green at the lows, printed a higher low with a bullish divergence, which was on that day there on the 11th of June, just before price rallied up from 57,000 to 67,000. So that was, 18% gain just on that one signal. And there's lots of these, like on the bearish side, a few weeks back here, Bitcoin was around 70,000. We got a swing failure here. And look, on the aggregated index, it was making a lower high and a bearish regular divergence. And then we got moved down. And in that example, price went down roughly 21%. Very nice indeed. And there are loads of these. I could give you so many examples. Essentially, whenever the aggregated index is at the highs in the red, looking at possible shorts, and then when you see those divergences, it's even stronger, and vice versa on the bullish side. Let's see if I can find a good example from a big pump. Oh, here we are. Back in August, was there something here? Yeah, there we are. Price was hitting around 25,000. The aggregated index is at the lows, in the green, higher low, happens just before in October, then we started to see that really strong move up. Yeah, I find I keep this on the chart all the time, and then when I see it at those extremes at the top or the bottom, and also with a divergence, then I start drilling down into all the subcomponents and really get a feel for what's going on chain. And then once I think there's an opportunity, then I can start bringing in all those other more conventional tools to get those confluences and get into those really, really good trades. The on-chain bundle is 1 out of 10 powerful indicators, and this one will give you a unique insight into on-chain activity on Bitcoin, Ethereum, and the stablecoins, and it will help provide an extra layer of analysis on top of your more conventional metrics like the RSI. Now, there is quite a lot going on with this tool and all the different components. So I've put together this table which maps all the timeframes, data sources, and price impacts of the different components. So if I move my face, feel free to pause the video, take a screenshot, and then you can refer to this so you always know what you're looking at. And you may also have noticed that I didn't cover the longs and shorts ratio crossover or the open interest oscillator, and I will be covering that in a future episode because those are bigger topics, and there are other tools in the MDX Algo suite that complement this very nicely. So if you would like to catch that, then hit the subscribe button and the notification bell down below so you can be prompted when that episode comes out shortly. This week, for my guest on the show, I have MDX community member Thumpcase, who will share a trading strategy he's developed with the retail stablecoin demand tool we saw earlier, which looks at specific patterns in the indicator line that can help you recognize when to execute trades when you see these setups appear on your chart. And his first example is the most simple, which are these M and W shapes before tops and bottoms.
Okay, so the first pattern is real simple. It's a M and a W. The M is for down and the W is for up, okay? And when you see the M forming right here at the top is your entry point, at the top of the second hump right there, okay? So see right here in the chart, see how there's a big M, 1 and then 2, right there is your entry point. And then see, there's actually a smaller M right here that kind of confirming the second hump of the M.
The next useful pattern is when we see regular divergences with a subsequent dip down into the green or peak up into the red before a potential reversal.
A divergence, you'll see squiggly lines with a divergence, okay? And when you see that, what you're looking for is the next big dip up. You want it to dip up into the red or into the green. Okay, so it'll be like that. Or sometimes it'll be like this. The next little dip. Or sometimes it'll go off and do this. And then when it finally comes up and makes that big dip, that's your entry point at the top of that dip right there. Okay, and it's the same to the downside. Instead of a M, it's going to be a W.
Another variation of the divergences is when you see multiple divergences one after another connected by several lines.
Okay, there's also this double divergence that will flash sometimes. Double divergence, when they connect like this, that's also a good signal. So see, the one flashed, you didn't get a dip down, but you got this double divergence that flashed, and right there is your entry point.
Next, Thumpcase shares a really useful insight into spotting differences in the actual divergence shape and pattern on the higher time frames versus the lower time frames.
And then sometimes, there'll be two big dips, something like this, then it'll come up. Okay, and then a divergence will flash across them. and your entry point will be right when that divergence flashes. Usually it'll flash right across the top. Okay, so this is more on the higher time frames. It'll show up like this instead of that whole dip. But if you go to a lower time frame, you'll probably see one of these patterns in the same place. Okay, the higher the time frame, the simpler the patterns are going to get.
Next, Thumpcase points out some really nice examples of when we get these much bigger moves, usually from swing trades, which are signified by the stablecoin indicator being at the absolute extremes of the top or the bottom of that indicator band.
Right here, so you've got a hidden divergence. And right there was your entry, but see how it's like up higher, like that's a more like stronger signal. It'll be like a bigger move. The ones in here, like down in the middle, will be like smaller moves usually. But like the big moves are going to come from up high or down low.
Lastly, this is a helpful pro tip on how to actually set up and view your charts so you can actually see when these different patterns are occurring.
One last thing is you want to have it so you can see some history on it, so you can see kind of what direction it's going, and where the last dip was and the last divergences. I see a lot of people with it stretched out like this. Can't really tell a whole lot like that. You want to have the history on it.
Now we move into applying these patterns into some real-world trade examples, starting with that simple W pattern, which can lead to a good long opportunity.
It's not always going to have a divergence. A lot of times these big W's are good. You can enter on the second dip right there.
Next, we have some good examples of reversals in price action when we see those divergences followed by a dip or peak.
So you got this divergence, and then the next dip up. Right there was your chop for entry. Okay. See right here how you got the divergence, and then once it finally dipped down, the next dip, see it actually made a W, but that dip was your entry point. And this works on all time frames. So see right here, you got this divergence, it's going down, down, down. Once you finally get a dip deep into close to the green or in here, that's going to be your entry point. So see, okay, and then see how here is going up. You got the divergences. Once you got the dip, this one was actually an M. Once you got a first dip, it wasn't it. It come down and made an M. There was your entry point. See, you got this regular divergence. Okay, but we never got a peak up. So once you see that, you just wait. Once it finally peaked up here into the red, there's a good entry right there for down.
Not to be forgotten, for the continuation trades instead of reversals, you want to be looking out for any hidden divergences.
Now see this one, this hidden divergence is going in the direction of the trend. So you got that next dip down entry, and it'll be a good entry for like a continuation.
And lastly, to bring all this together, Thumpcase shows how you can combine these different patterns together as the price action is evolving to catch some really good setups.
Okay, you can use this on big time frames too. So you just pay attention to the divergences. Okay, so see, look right here. So you got this was the start of the whole big move. You got the divergence, the next dip right there. So see right here, double divergence, and the next dip. Okay, it's going to be some combination of either right across the divergence the next dip, the next W. But when you see it, you'll know. So if you're thinking of taking the trade, you see one of these patterns that's a good confluence, it's accurate. See right here, this is the 1 hour divergence. The next dip wasn't it, but the W was it right there, the bottom.
So that's it from me for the on-chain bundle. I hope you've enjoyed this episode. And this week, I'm going to leave it to JP from Thumpcase to play us out on his boomboxes. Take it away, JP.